My name's Chris Bodger. Hopefully you can all hear me now. I'm the Director of Commercial Banking for the NatWest in Lincoln. For those who don't know me, I've recently moved to take over this role from Pat Doody, who's a person well known in the Lincoln area and is now looking after our LEP. So the purpose of today's call is to talk about the various loan schemes and what's going on in the financial world in terms of the COVID-19 crisis. So what I'm going to do is just cover off what the various loan schemes are, just tell you a bit about what's been going on in terms of those loan schemes, and then hand over to the sector experts in my team. So firstly, since the impact of COVID, there's been 3 loan schemes which have been introduced to the financial world in terms of banks, which comprise the Bounce Back Loan Scheme, the CBILS Loan Scheme, or to give it its correct title, the COVID Business Interruption Loan Scheme, and then there's also a large CBILS scheme. So taking each in turn, how do they actually work? The BBILS, as we refer to it, or the Bounce Back Loan Scheme, is a loan of up to £50,000. It is relates to for businesses up to 25% of their turnover, and the it's at a set interest rate, 12 months interest and capital free, with repayment over a subsequent 5 years, i.e. a 6-year term in total. The CBILS is for businesses borrowing more than £50,000, up to a maximum of 5 million, with terms that first year interest and capital free and repayment over the subsequent 5 years, i.e. 6 years in total. The large CBILS is for businesses which across their group turnover in excess of £45 million. So if you're over £45 million, then you would fall into the CL bills, as it's referred. And again, repayments terms differ slightly on that, but it is a maximum term . Government support in terms of an 80% guarantee behind them, and these guarantees are in favour of the bank, and no banks can take any other security in respect of those loans at the same time, certainly for CBILS and for the Bounce Back Loan Scheme. There are 1 or 2 checks and balances, but I can answer any questions on them in due course. So how have we been doing? Well, in terms of my organisation, in terms of NatWest, Lincoln is part of the East Midlands. Across the East Midlands, we have, in commercial banking world, we've lent over £200 million, and it's somewhere in the region of 1/3 of all our customers have taken advantage of the various the business interruption loan schemes. Within Lincolnshire, we're talking about tens of millions of pounds have been lent, and again, it's the equivalent of about 1/3 of all our customers. In addition to that, of course, I only cover commercial banking, so our business banking teams have also been providing lots and lots of loans to lots and lots of customers. So that's sort of how the scheme works and the numbers that we're doing. Running alongside it, we have also initially, prior to the schemes coming out, we have been supporting customers with providing capital repayment holidays on all of their loans as requested, which we've been happy to do up to a period of 12 months. and many customers are taking advantage of that as well, because one of the purposes of the CBILS scheme, or one thing which is exempt from the CBILS scheme, is that you're meant to have capital repayment holiday everything that you can do before you take the loan. So that's really a very broad brush outline of the loans and what we've actually done. What I'm going to do now is pass over to Gary, who is going to talk about the manufacturing sector specifically.
Thanks, Chris. Yeah, just so I'll just give you a brief update in terms of the manufacturing sector as a whole, the current position that we're seeing. From our perspective, we've seen a large take-up in the capital repayment holidays that Chris referred to ease cash flow during the current period. And as a bank, we've lent over 400 million on CBILS to the manufacturing sector itself, which I guess is a demonstration of the impact that COVID has had. Feedback I'm getting coming through, many manufacturers have continued to operate during the COVID period, albeit many are on a vastly reduced basis with skeleton staff meeting essential orders. The latest industry reports are indicating that just under 95% of manufacturing businesses are now operating again in some capacity, with many reopening mid-May after the VE Day bank holiday. Big challenge within this is that about 30% have seen orders decline by up to 50%, with 25% of manufacturing businesses seeing order falls in excess of 50%. So significant impacts there. 20% of manufacturers have furloughed between 25 and 50% of their staff, and the majority are saying they will only look at unfurloughing once there are sufficient order demands to support such a decision and for it to be commercially and financially viable to do so. A quarter of those that have remained open are indicating that they plan to make redundancies post-furlough as they seek to reduce overheads, and many are looking at options including automation and cobot working. So cobot is the robots that work alongside humans in a safe environment, to help improve productivity efficiencies and also safeguard safe distancing, so it has a double impact. Potential also there for a benefit with any health and safety implications of heavy lifting requirements, etc. A lot of manufacturers are forecasting it will be more than 12 months to return to normal trading conditions, and to this end we're seeing sort of huge concerns within the sector, supply chain challenges both up and down, where customer base that they're delivering to or supplying into not necessarily being open, and also raw material manufacturers that the raw materials that are required, they've not been open, so they're having to look at alternate sourcing. Alternate sourcing leads to various different impacts. It can lead to cash flow problems or challenges, shall we say, in as much as new suppliers require pro forma because there's no trading history as such. So again, that has an impact when we're looking at business support for them. The big challenge with all of these is that banks really need to understand the financial needs of a business, obviously both now and in the future, and it's imperative really that business owners have a strong understanding themselves of their financials to assist us with this, as well as really having a really strong focus now, and many have had to come up with strong and robust continuity plans to assist. The current slowdown, I guess, if we're looking at it objectively, it's led to an opportunity for many to plan for the future. Manufacturers tend to be very much hands-on and sort of very focused on the day-to-day business needs. This slowdown has created a opportunity for many where they can look and start to plan. I've worked with a third-party business, Mr. Smith Management. They've produced a 2-page lean-based document that covers crisis management of the here and now, stabilisation and then recovery. They've offered a free video session to support manufacturing businesses, and I believe that this document and the associated support has been posted to the Business Lincolnshire website. All my customers and contacts within the sector have been emailed this level of support to assist. I guess as well from a manufacturing basis, there's been a lot of talk about reshoring to the UK because of the initial sort of base of the crisis being China and the obvious supply that has to the world. Biggest challenge here is that we are not resourced in the UK to manufacture in bulk as it currently stands, and there would be a real need to review medium-term planning and infrastructure improvements, as a key requirement is to move product around efficiently. Clearly that would require significant government investment to support, but one of the things that has come out of this that we've seen is that unfortunately supply chains have historically been built on sand, and it's been very much based on cost rather than robust and structured supply. Really, for me, that's just a sort of brief run through of what I'm seeing or what we've seen in the sector. I'm happy to take any questions as we move on through this, and I will now hand over to Dave Ashby to take us through the TMT workspace. Dave.
Hi, thanks, Gary. So hello, everyone. As Gary said, I'm Dave Ashby. I'm a Senior Relationship Manager for NatWest in Lincoln, and I'm also the TMT Specialist for the East Midlands area. So I look after a portfolio of established clients in a variety of different industries, but with a particular focus on the TMT sector. And just so you guys know, TMT is technology, media, and telecommunications. I'm just going to spend a few moments to talk about what I'm hearing in that sector. So TMT businesses have been affected in much the same way as, I guess, any other business by the coronavirus outbreak. And I guess in particular for them, disruptions to their workforces and the challenges that lockdown has imposed on them and their staff, and also, moreover, the impact on their clients and their suppliers. So they've had to do very much the same things as other businesses, furloughing staff, reviewing business plans, just assessing what that initial impact was. However, generally, with technology being at the sort of front and centre of that industry, I think most TMT businesses have been able to quickly and successfully mobilise their workforce to operate remotely, and indeed many of them will have been operating home working or remote working to some extent already. So I think whilst the initial impacts were great, I think that has settled down very quickly. So the varying impacts of coronavirus on the TMT sector, I think, will be determined by which vertical sectors that the business is operating in. For instance, if you're a technology firm providing ongoing software and maintenance contracts to the NHS, you'll be doing, I guess, okay. A firm providing video conferencing software, such as this, will be doing okay. However, a firm providing a ticket booking platform or software into the travel industry may not be faring quite so well, and the impacts both of those will be very, very different. For technology businesses, TMT businesses who are operating in the right verticals, and for those that can successfully navigate through this period, I believe the enforced lockdown will accelerate the move towards digitalization, and that there will be plenty of opportunities that arise from this period. So it's forcing lots of businesses generally to think about their ability to work digitally, remotely, and also automation. So maybe in the sort of short or more medium term, I think there's likely to be an increase in investment in automation and digitalization from all businesses, as they seek to increase their resilience against future disruption, and the potentially second waves, etc. But it's pushing forward those plans, and there's definitely a crossover into other sectors outside of technology. So as Gary has talked about, the manufacturing sector will be looking at ways of automating cobots, etc. There's going to be a really big push on agri-tech, and that was happening before this outbreak, and has probably exacerbated that further. And no doubt, the conversations about reshoring, technology will be a big driver behind that as well. So for the businesses, the TMT businesses that have been adversely affected by coronavirus and may need some financial support, I guess what is available to them. As Chris has already mentioned, we have the government schemes, B bills, C bills, and CL bills. That is available to the TMT sector, although actually the numbers in that sector that have been applying for it are proportionately low, and there'll be a variety of different reasons for that. There'll be a lot of TMT businesses which won't be eligible for those schemes we've just mentioned. Part of the application process for those schemes, or certainly the C bills and the CL bills, is a viability assessment. And for many technology businesses, especially young or growing technology businesses, they may not be at a stage where they're generating profits yet, and therefore they will unlikely be able to access those schemes. But there are some other schemes that are available and could provide some funding for them. So the first and I guess most significant one of those is the Future Fund. Okay, so full details of that scheme can be found at www.gov.uk, or go to the British Business Bank website. But very briefly, it's a £250 million fund which has been introduced to help those businesses that I say wouldn't necessarily be covered by the other schemes, and really trying to help and assist those innovative businesses of the future. They're convertible loans somewhere between £125,000 to £5 million. The business must have raised at least £250,000 of equity investment in the last 5 years, and the loan amounts must be match funded by investors. There must be a UK registered company and incorporated before the 31st of December 2019. So that scheme initially is available until September 2020. But I say for fuller detail, refer to the gov.uk website or the British Business Bank. Other things available, so Innovate UK have a £750 million fund available for businesses to innovate for a variety of purposes. That's a mix of grants and loans. So again, perhaps the best place to go and find more information about that is www.gov.uk. There is the recently launched local authority discretionary fund, which it's certainly smaller in terms of numbers, so maximum of £25,000 available. It is at the discretion of the local authority, and I guess really aimed at the sort of smaller businesses. The application process is via your local authority, so again, please refer to their websites. Other things that may be available, so BGF Ventures they have a specialist fund for early stage businesses, and then also private equity, which is how a lot of these businesses are funded. I guess a first port of call may be to speak with any existing investors. And whilst there is new investment is available, I guess it is a little bit harder to come by at the moment. And then finally, to conclude, I think it's also worth noting that for those businesses that are seeing growth in the sector and growth opportunities, if there are funding requirements that come from that, then of course conventional lending is still available, and I'm sure we'll be talking to our clients about that. Okay, so I hope that gives you a brief overview of what I'm hearing in the market. Again, we will have the opportunity for questions if there are any at the end of Jane's presentation. And I'm now going to pass you across to my colleague Jane Hickson, who is the Relationship Director for Leisure.
Thank you, Dave. As my name's Jane Hickson, and I've been involved with the leisure sector now for over 20 years. For those of you on the call today involved with the sector, I'm sure you'll all agree that the COVID impact for the sector could not have come at a worse possible time. 2018 was impacted by extreme heatwave and Euro football, which triggered significant reduced foot flow. 2019, Brexit uncertainty for the majority of the UK and a reluctance to spend for fear of what lay ahead. The majority of us therefore saw 2020 as a year of promise, but with storms galore in the early part of the year, coupled with a late Easter, the effects of COVID was felt as early as January for those clients who relied on the demographic age 55 or over, who were watching the news avidly. As Chris conveyed earlier, for most of my clients, they've taken up the option of a 12-month cash repayment holiday on all of their term debt. This enables them to cover the seasonal low of 2021 and the early winter, and recognising the missed seasonal high cash generation period, which provides support to get them through that closed down period. The majority of all furloughed their staff, have agreed rent-free periods through to the end of June, taken up HMRC support, used the business rate moratorium, and where appropriate have sought the government grants where the rateable value has been permitted. If you've not already done so, I can only encourage you to speak with your suppliers. I have been speaking on a regular basis with both brewers and wholesale food suppliers who encourage me all the time to talk to my clients and say that they want to work with them. They want them there as clients when they do reopen. And I think compromise and understanding is key here, as it enables both operators and suppliers to work together, plan cash flows, and present to their funders the need for working capital, which is going to be very much required when their doors finally open. So looking forward, there's the constant phrase of a new norm. And one thing that does recognise is that there will be substantially reduced capacity for people opening their doors. There are several industry bodies and professionals looking at what this new norm is going to look like. And this covers things like digitalisation, but the one thing is for sure that everyone has to be fleet of foot in encouraging change within their business to ensure survival in the early days. Now, these changes are looking at seasonality and how we can minimise that, looking at customer sentiment and the confidence in the market. So taking each of these in turn, seasonality, I'm working closely with the LEP, who are working with industry experts, campaigning locally and with central government. So an example of that is removing seasonal restrictions on campsites. So they have a 12-month license, licensing external areas that are currently not permitted to sell alcohol and deliver food. And this will all help minimise the impact of those shoulder months of the key trading season. There are frankly daily updates on policies on consumer sentiment. And just this morning I was reading that the World Health Authority are looking at now reducing the 2 metre social distancing rules. And once again, we follow Europe in this, where 1 and 1.5 metres are frequently now put in place in France, Germany and Spain. Current public views are that they're keen to meet with family and friends, but it's not necessarily in our pubs, restaurants or hotels. However, the sector is well known for its resilience in recovering quickly from the likes of SARS in 2001, our recession in 2008-9, and being the first to enter the downturn, but it's often the first to come back, as our public generally requires social gatherings. However, with this global pandemic, it is expected that it's far unlikely to return to past levels of trading before the end of Q4 2021, and for the vast majority, early 2022. So what's there to help businesses encourage confidence with the public on their reopening in this sector? Well, UK Hospitality has presented a 73-page document to the government in the last few weeks, which provides a proactive guidance on procedures, processes for reopening safely. It not only covers food and beverage, but accommodation, visitor attractions and retail. I'm assured that it's going to be published any day soon, and our partners Visit Lincoln will post their document on their website when it's available. So I'd encourage you to look at that website on a regular basis. Visit England is launching a kite mark accreditation in June, and I'm assured again this portal is going to open any day soon. And it's being launched so business can display a COVID secure poster stickers. It can't say it's COVID safe because that enters into the realms of all sorts of legal implications, but it will provide guidance notes on how to demonstrate and market this to your clients, all the precautions that you have taken, what you're doing as a business to minimise risk and transmission. And again, I can only assure you that this is going to be launched sometime this week, and the Visit Lincoln website is going to be our local portal for that. I've been invited this morning to a call on Thursday morning where I think more detail around that is going to be presented. Recent research in terms of what our customers are looking for is quality assurance in both cleanliness and traceability. Excuse me. And Visit Lincoln are working on display packs that may help and provide you with some time saving so you can display those and share your processes and procedures. Green agenda. People are acknowledging that this comes at a price in smaller businesses at the moment, but people are working with other businesses in the area to promote the green agenda in our cities and coastlines that encourage people to come back to our area. And finally, marketing. There's a video campaign that's been launched to over 150,000 people that is encouraging staycation, and in particular what we've done as a county. And it can be used on your own websites for your own marketing purposes. Dave's already touched upon this in that there are now discretionary grants with local authority grants coming, and I believe that portal also opens this month, where businesses have not been able to gain the support of the 10 and 25,000 grants available in the early days. It's aimed at operations that have been adversely impacted and will work with businesses to perhaps fund the PPE equipment and screens that are going to be required in this industry. And I just urge you to apply for those as soon as you can. And finally, just merging with some of Dave's sentiment, the industry is looking to digitalise more and more. And just this week, I saw an application that allowed your customers to pay for staff tips without handling cash, and it's an online platform that you can download onto your phones. And I guess it's just being more and more aware of the digital help that will be brought into these leisure businesses that will get your customers through your business, reduce the handling of cash, assist with marketing, and it's just a new norm for this sector. That's really all I can say at this moment in time. As I say, the landscape is changing daily, and I'll take any questions at the end. So I'll hand back now to Juliet. Thank you.
Thank you very much, Jane, and to all of our presenters there. It was really good to get that insight from you and to understand a bit of the support that's available to the businesses and also the impact that the pandemic is having on the different sectors. And this is now our opportunity for some questions. So if there are any burning questions you have there, please do ask them. A reminder, you can ask them via submitting questions through the question pane in the attendee control panel, or you can actually ask them directly to our presenters by clicking the raise your hand button again, which is located on the control panel. So I should just have a look to see if we've got any questions coming in. Okay, firstly, we've got one from Steve, and Steve is saying, can a business have a bounce back loan and a coronavirus business interruption loan? Not sure who that's best to aim for answering.
I'm happy to answer that, it's Chris. The simple answer to that is no, specifically they can't. If you have a bounce back loan, you can't have a CBILS as well, and vice versa. If you needed the extra funding, CBILS itself goes up to a funded level of £5 million, so that would incorporate what you would want under the bounce back loan scheme. The only difference really from a bank point of view is that under the bounce back loan scheme there's a 100% government guarantee. Under the CBILS scheme there's an 80% government guarantee, if you see what I mean. So there is an unsecured element, and you do need to provide a degree more information, so cash flow forecast and so on and so forth with a CBILS scheme, whereas with a bounce back loan scheme it's just a matter of filling in an application form. But no, the simple answer is no, you can't have both. Okay,
that's great. Thanks, Chris. We've got a question in from Eric, and Eric's saying, if you own two businesses and 2 times limited companies, can you get a bounce back loan for both if I'm the majority owner shareholder for both? Anyone could answer that for us, please?
There have been a number of changes, I think it'd be fair to say, in the criteria on that. But technically speaking, if the businesses are in the same sector and you are over a certain percentage of ownership, then you may be restricted. But I would suggest that you probably need to talk to your bank, because the rules have changed as we've gone along, as they have with a number of these schemes. So you might have examples where some customers have actually got 2 loans because the rules have changed as the scheme's gone on. But technically speaking, if they're in the same sector, certainly then they wouldn't be eligible. So if, for example, you've got someone in the leisure sector and they've got another business in, I don't know, agriculture, yeah, you'd probably be able to get it. But if you've got 2 businesses, if you've got 2 pubs, for example, they're in the same sector, so you wouldn't be able to get 2 bounce back loans.
Okay, great. Hope that answers that for you. Thank you. We have another question in from Kate. And she's asking, what information will a lender need for a CBILS?
Do you want to go do that one, Dave?
Yeah, I'll take that one for you, Chris. Yeah, so I've done a number of these CBILS applications. So there's a fairly basic application form which can be completed via our website, and it asks for various details about how your business has been affected by coronavirus, what you're basically doing, what other schemes you've taken advantage of, what other financial commitments you have. So it'll take you through a series of questions. We would also, I guess, expect to have the most up-to-date financial information, so financial accounts and any management information that you may produce. And that's really just to kind of get a benchmark of where the business was pre-coronavirus. And then a lot of businesses, as Chris has already mentioned, are providing a sort of 12-month cash flow forecast. And that just really gives a visual indication of what the impact on cash is, based on a set amount of assumptions during the next 12 months. And then from that, we can kind of establish the requirement of the business and take forward an application accordingly.
It is just worth mentioning and clarifying something which we didn't mention earlier, is that you need to approach your own bank for the CBILS or the various loan schemes and that. So we are not actively doing CBILS for customers of other banks. It is an application that has to be made to your own funding provider, to be quite honest.
Right, lovely. Thank you very much. We've got another question in now. This one's aimed for Jane. And the question is, are you seeing a difference in how leisure and tourism has been impacted in Lincoln / the city areas versus Skegness, Cleethorpes and the coast?
Okay. I think initially that there's been no difference. Quite simply, all of the businesses have been closed. Moving forward, I think our coastal businesses are going to find it quite difficult indeed, because of that they're heavily impacted on weather. And whilst we're all enjoying this fabulous May, that has been a complete frustration for them, because day trippers that would normally sort of provide the cream of their trading in the year, because it's a shoulder month, that they're missing out on that completely. Now, as they went into this this COVID downturn, they lost a mild winter because of all the storms, so that generally kept cash flow ticking over. And at city centres, people were still happy to come out even during the storms. They might have been impacted slightly, but not to the extreme that we saw with the coastal resorts. So the knock-on effect of that is that traditionally businesses during the winter months spend the previous summer's cash flow on renovating, improving, expansion programmes. They rely upon a mild winter to sort of keep cash flow rolling, and then the summer to really just go again. And it's that cyclical, and the cities don't get that, not to the same extreme. So the coastal businesses really are reliant upon I guess some movement on trading times, sort of licensing. And I know those that are sort of already planning for this are engaging with licensing authorities now to come and see if they can extend their pavement areas, because it means with the reduced foot flow, they've got the ability to bring a few more people through the door, but that does rely again upon the weather staying with us. So yeah, I think in short, coastal businesses certainly are more impacted than city once we get reopened, because they've missed that winter trade.
Okay, that's great, Jane. Jane, if you could just stay with us, we've got a follow-up question to that from Carl. And he's saying, we've seen articles about service to accommodation being a good option because of social distancing. Is that something that you or others believe will be true?
Sorry, Juliet, you just froze there. I missed that.
Right, okay, no problem, I shall say it again. So the question is that we've seen articles about serviced accommodation being a good option now because of social distancing. Is that something that you or others believe will be true?
Well, it's certainly going to be favoured by, and I come back to sort of public confidence within, and that's why marketing is going to be really key, because a lot of hoteliers and guest houses have been taking this time to go through, do a deep clean, renovate, decorate. I mean, I've been to some businesses and they look fabulous, and I don't think they could have done any more. Hotels are working really hard at the moment to create an efficient room service offering, and that again needs to be shared with the public and on their websites, and getting that message out there to encourage people not to sort of use the staycation, and it's not just a Brexit staycation, this is COVID staycation, to say we are safe, we're as secure as we can be, and again, hotels and guest houses need to look. I'm still not quite convinced how this track trace online facility is going to work that the government set out. But with GDPR implications, people are also considering in those sectors how they give people the confidence that if somebody has been in their site and they subsequently leave and they find they have contracted COVID, that they report it back to that business and they can share it with people who are in the business at the same time. That's another complexity, and I guess that's something that our mentor HR HSE teams are working closely with. And I would encourage people to look at that kind of support that gives people the confidence to convey that to the end client.
Okay, great, thank you. And our next question has got a bit of a tourism slant to it as well, so you might have to stay there a moment, Jane. This is from Jack, and he's saying, how important is the green, clean, low carbon technology to the recovery of both tourism and wider economic recovery?
I guess it's creating a new economy by the fact that people they've seen the impact that COVID's had on our environment, and it's been very well received, and I guess it's been enforced for most. My biggest concern is that as a leisure operator, people are going to find that quite a costly process to follow. And this is where government grant and support and local authority support is going to be needed very much to encourage businesses to take up that mantle. But it's very much on the consumer agenda, and I guess those that don't try and follow it will get left behind. And it's here to stay, I'm afraid.
Okay, that's great. Thank you very much for that. And if there's anybody else who'd like to ask any further questions, that brought me to the end of the questions that I've got coming up on my screen at the moment. So just leave a couple of minutes for any last questions that you may want to submit. Again, just a reminder, you can do this via your question pane on the control panel, or you can raise your hand if you'd like to ask a question directly to one of the presenters. No, it doesn't look like we've got any further questions there. So that will bring us to the end of the session. So I'd just now like to take this opportunity to thank our presenters from NatWest for sharing their expertise with us today, and also to thank you for attending today's webinar. Once you leave the session, you will receive a survey on the presentation, and we'd appreciate it if you could take the time to complete that and provide your feedback, including any suggestions of topics you may wish to see delivered in future webinars. You'll also receive a follow-up email within 24 to 48 hours with a link to viewing of today's webinar. Please do keep an eye on both the Business Lincolnshire and the Team Lincolnshire websites for the latest business updates. And if you've not already done so, subscribe to the weekly newsletter at www.businesslincolnshire.com. If you're interested in joining Team Lincolnshire, please visit the website or contact Team Lincolnshire at lincolnshire.gov.uk. Finally, just to let you know about our next couple of webinars that we've got coming up that we still have places available for. There is one this afternoon at 2 o'clock, which is focusing on emerging from lockdown and making your workplace COVID secure. And then we also have one on Thursday at 2 o'clock, and that one is marketing in a post-COVID-19 world. You can actually book for both of these webinars via the Business Lincolnshire website, as well as view a list of further webinars that are available to you, all of which you will find located under the events menu on the website. Our next free joint webinar, delivered to you by Team Lincolnshire and Business Lincolnshire, will be covering urban design in a coastal context. Details of that will be available shortly on both of the websites, so please keep your eyes out for that. So now it brings me to say, on behalf of Team Lincolnshire, Business Lincolnshire and our presenters from NatWest, we would like to thank you all very much for joining us today and hope you enjoy the rest of your day. Thank you very much.